Hi, I'm Bianca Nel. I get a lot of questions when I calculate my taxable profit or loss. They indicate to me in a question the item is not taxable or not deductible. What do I need to do? Right, now this video is a short summary comparison and it's there to help you remember the principles and what you need to do. Please note that I have included on YouTube two videos where I work through the scenarios on their own with amounts and an example to indicate to you the meaning thereof. This video is a summary, a comparison to assist you to remember these principles. We need to take it one step back. Where we need to calculate our taxable profit or loss, our first step will be to include our profit or loss before tax from our profit or loss statement. This is as per your accounting rules, your IFRS rules. Step 2, you need to take out all the items where the accounting and the tax rules are different and include your tax rules to be able to calculate your taxable profit or loss as per your tax rules. Right, now when you look at the screen, you will identify that I've changed the table a little bit. At the top, we will have our step 1, which will be your implications of your profit or loss before tax, and your step 2, taking out and including tax rules. Now, when we look at the two phrases, first phrase, there might be items that is not taxable. Now, if we look at item number 1 on the left side of your screen, income. For accounting purposes, the income will be included in our profit before tax, debit bank or debtor, and credit income. Remember, this is your accounting. But if we need to calculate our taxable profit or loss, our next step will be to take this out. Therefore, a cross. When you look at the screen, I do prefer to make use of a tick mark. Yes, it's included, and a cross. We need to take it out. Our next item, expenses, not deductible. Our expense is included in our profit or loss before tax. At the top, debit expense, credit bank, or creditor. But for tax purposes, it should not be there because we may not deduct it if we calculate our taxable profit or loss. It should not be there because we may not deduct it. Therefore, a cross. Let's recap our two items. On the left side, when we have our income, that is not taxable. Therefore, it cannot be included in our profit or loss before tax. We need to take it out. When you look at the signs, it's included, it's a positive for profit and loss purposes, but for tax purposes, if we take it out, we need to deduct it. Now, when we look at our expense, the expense is included in profit or loss. For accounting, it's an expense. It has a bracket normally, it's a negative. If we take it out, it should be a positive. Then, extremely important, you need to think debit, credit, in, out. Income, expense, it's included for accounting purposes in your profit or loss, but for tax purposes, it's not taxable. We need to take it out. Expense, it's not deductible. We may not deduct this. Our tax authority will not allow us to decrease our profit or loss with the expense amount. Therefore, we need to add it back. Then please remember, I have included separate videos to explain this by means of amounts on a basic example.